Oh my God, oh my God, oh my God. Hey guys, Stephen on Fortune, creating fortunes for the future. Today is an update on Plus 500. Last week, you probably saw one of my videos regarding this new, not a new account. It's an account that I wanted to show how we can drop the volume of your trades, maybe to manage your capitals. And these particular trades that I have opened last week, as I said, I'm going to open them up and check them up this week. And yes, it's Tuesday today, 21st of March 2017. It's time to double check our trades and see how they're doing. We open up three assets, two currency pairs and gold. The position of Euro USD has gone against us, but it doesn't matter because I'll show you in a minute the strategy, the money management strategy that we apply there. And we got Euro GBP, and that's on the money. Okay, here we are. It's oil, not gold. Sorry about that, but we'll go through it, look through this chart, the oil. Now, those are the three positions we opened simultaneously last week. And as I said, today is the day to analyze the chart and see what's happened. But basically, the more important thing that I wanted to show was the money management aspect or strategy that must be applied in essence with looking after your capital. We've got a big capital up here. And now I'm going to show you how much we spend. I think if you remember, for each of these open trades, we spend a minimal amount of $209 per open contract. Now, this is the money management we're talking about. You can easily drop that down a bit further if you wanted to trade with, let me give it to you an example. Let's just take this one for example. This is an example. If we were to open up a trade with GBP AUD, and if we didn't have enough capital, we drop all this volume down to its lowest. And that's it. And the lowest you can trade with this GBP AUD on the Plus500 platform is $10.69. If your capital is minimal, then these are the sort of opening trades I suggest you open up most of your trades with small amounts. This is not to make money. This is really just to teach you where the assets is moving. If you're not familiar with signals and chart work, and if you're such a lazy person, you don't want to do any analytical work, then this is one cheap way to gauge where the market is. Of course, you're going to lose, say, $10 to $20 going through the process, but it is quite accurate. Now let's go back to our trades. Now we're going to focus on the trades that gone out of the money. Now Euro USD, sorry. Let me have a look. I've got a couple of charts here that's already been opened. Should be Euro USD. Oh, come on. And that should give us some reference to where this stock is today. Okay, now let's go back to our platform. We bought it on the sell position, and we bought it the rate that we bought it off. Okay. Oh, here we go. Well, no, that's current rate. Doesn't matter. What is important that you understand, you're out of money now. That's around about $1,000 out of the money, for example. Now we've got to try and recoup that money. And if we check the chart, where's the chart? Oh, here we go. This particular asset that's going up and it's coming down, and it looks like it's reached its next highest, and it might do a reversal. And this is where we probably have to do a reversal trade too if we think this is coming back down. Double check the chart if there's a trend. There's definitely a trend on a long-term view. Yes, definitely a trend there, but it hasn't broken through that resistance line. There's a resistance line right there that hasn't broken through. So it could reverse, or it might just continue. Okay, it's starting to move upwards, so ooh, that's a hard one to gauge at this stage. But what I'm going to do is I'm going to gamble my bet, judging on the chart. It wants to break through the resistance line, and I'm going to take my bet it will break through it. Otherwise, we should be taking a put position. Dilemma. Now, this is the difficult part of trading. You can come up with these sort of scenarios. As I said, this is the first time I've come back here since we opened these trades to check it. And either I can leave it alone, or I do a reversal trade. A reversal trade, of course, is to come against the trade that we have before us, but it's out of the money. Okay, now it's starting to show it is going to come down. So I could open up another position, a 3 more position going down to catch it coming down. Whether that will work or not, but here we go. It's already short-term trades, mind you, but the long-term trade should be a bought position. What I'm going to do is gamble a little bit to capitalize on this asset. If it drops down to this area again, then I'll gain a little bit of money and sell off the profit. Or if it continue, then of course I'm going to profit quite dearly if it does drop down to the bottom where these other ones are, with the supports are. And I think that's what I'll do. I'm going to open a couple of put positions. I'll say 3 more put positions. Okay. No, not at $2,000. I'm going to take it down to say $100, for example. Yep, that will do. 3 positions. 1 more. And we're done. We're definitely done with that asset. We've opened up 3 more positions on the same direction, south. Now we're going to go and have a look at our money maker, Euro GBP, and double check the chart. Oh, yep, that's still going up. And I think, oh no, that's on the south. So what we're going to do is close these off and take the profit, because Euro GBP is definitely heading back up. That trend line is strong. I'm going to go for sell my profits. This is harvest time. Take a profit $169. Close the positions, and I'll show you how much we spend to get that money. What was our risk? $209. So we made $170 worth out of our open position. And by closing them, we're taking the profit and adding the profit into our balance. Quite simple. This is harvesting, and I'm going to open up new positions. Of course, after we closed all these trades and taken the profit. Okay, I like that. So what are we going to do? GBP. We're going to buy some positions. Double check. It is going up. It's definitely going up. Yes, we're catching it just coming down to the support line. That looks good. Now buy. We're going to buy 3 positions at the same value. Not 2,000. I could leave it at 2,000, but I want to show you the lowest denominations. How much you can buy these or open a contract with these. Well, as you saw, the first one, Euro USD was $10. Euro GBP is $23. So the value differs from one pair to another. Doesn't matter. It's what you can afford. Well, at this moment in time, I think we traded last time $200, so we're going to go back there to say put $200 back at risk and buy. Okay, so these should be all bought position. Yep, buy. We're going to buy 3 positions, of course. Okay, buy. This is the beauty of investing. If you have a good, capital up here, a good balance, then you don't have to outlay all your balance and put it at risk, which, a risk means you're going to lose it. Because these platforms are highly volatile and you can lose a lot of money. Don't worry, I've lost a lot of money, so I'm not going to talk about the negatives. but I'm going to talk to you about the positive, or how you can trade successfully using some of these management strategies that I'm showing you right here. If you had say $1,000 in your balance here, then of course then you'll have to trade this asset, Euro GBP, at this level. Let me show it to you. I prefer you trade it at that much. That's the lowest it can go, and allow your $1,000 to grow slowly from small capitals, small risks. And of course, if you have a huge balance, then these volumes can be quite significant. And as long as you trade according to your risk factor, basically determines basically the terminology for trading. On a money management system, we only trade at least 10 to 20% of our capital. So say for example you had, this is your money, 54,000. I would use only 5,500 bucks to trade. I wouldn't touch any more than 5,500 bucks. So that gives you an idea, the reference of risk management that you can apply on your capital. So you might ask, what's this? Then what's the risk sitting there? Well, it's just sitting there in case it goes out of the money to support you until you come back on the money gain, like what you have seen here. If you add that up, that could be substantial. And if you don't have enough in there to support the losses, you could be totally out of the money. However, you don't have to follow this process I've just shown you. You could easily have taken your losses, cut your losses, and open up new trades. But I have found to a certain degree the market, as you know, it goes up and it comes down. So I'm hoping by leaving these open trades up at the loss, they will work. Hopefully, as I said, the chart is showing it could come back down. So I'm hoping it will come back down to this lower support line and surpass that first one. So that's the hope. And we got gold, sorry. And I'll open up another video later on, that's probably next week, to show you our results. And we're going to do that sort of week by week to show you these trades, how they're panning out. It's not the best of education, but I'll tell you what, that is some of the best that you can have. You are using live figures instead of sometimes using charts. By using live figures, you can sort of determine, okay, I'm losing this much, I'm losing that much, and that's how much I can bet or put at risk. And you can see it in real numbers to determine where you want to go, how much you want to put your money at risk. So I hope I'm giving you some idea. But anyway, those are the trades that's come up. Now, I think at this stage we better check gold, just double check gold, because it is out of the money. Now, if you wanted to, you can look at this and double check your positions. You can leave this position running, or you can do what is called a reversal trade. Reversal trade means these three positions was open at buy position. So if the reversal, they simply go the opposite. I haven't checked the chart, so I'm not going to open up a trade. I want to double check with not gold, where oil is moving at this stage, to be able to determine whether to leave it alone or do a reversal trade. But anyway, I hope I've given you some little hints there. Anyway, some of these icons that we see before us here, they can be confusing. These icons here gives you the time frame of the chart. The chart here is not much to be desired, of course, and I prefer that you have an account with something like investment.com, and investment.com has got a pretty good platform or signal and charting system to give us a reference where these assets and commodities and where the stock is moving. Anyway, simple jargon. But anyway, Stephen R. Ford from My Foot Fortune, creating fortunes for the future. Stay away from scams. God bless you. We love you. We'll see you on my next video. Bye for now.